Since the last time we spoke, I added a new stock to this portfolio. Today, I want to go over that company. I want to talk about what that company does, who their competitors are, and what I think the bull cases and bear cases for my new position are. I think this company has ample room for growth well into the future. So without further ado, let's get into it. My new position is MasterCard. As you can see, it's sitting here alongside Constellation Software. So as you can see, I'm already down 0.81% on my MasterCard position. As you can see, it's because, in the short term, I bought this thing a little bit higher than it currently trades. Now, to be honest, that is no concern to me. I'm going to hold this company for a very long time as I think the fundamentals are extremely strong, and I'm very bullish on this company's future. As you can see, it has been a compounder over the 5-year and 10-year. Over the 10-year, it's been a fantastic investment. All right, so let's start with an overview of MasterCard as a company. So let's start with their traditional business. I want to start out by saying MasterCard is not a bank. I only say that because, people got credit cards and they say MasterCard on them because they use the MasterCard network. But when they take out debt on those cards, that debt does not belong to MasterCard. It belongs to the issuer that would be the bank. How does MasterCard make money, you may ask? They make money through fees on volume and transactions. MasterCard basically sits in the middle of 4 entities. You, the person who is holding your credit card, the bank, the person who is issuing you the debt, and the store, the shop you're buying something from with your said card, and then the store's bank where the money is actually going to end up going. When you tap your MasterCard, their global network instantly authorizes and routes that data between your bank and the store's bank. They earn revenue by charging the banks, the issuers, and the acquirers for this service, primarily through 3 types of different fees. First is the domestic assessment fees. This is a volume tax. This is a small percentage fee charged on the total dollar volume of all purchases that flow through their network. The more people use their MasterCard branded products, the more revenue they generate. The second is transaction processing fees, the switch fee. This is a per transaction fee for the service of instantly authorizing, clearing, and settling the payment data between the banks. It's the fee for using their fast, reliable, and secure technology rails. Third and finally is the cross-border fee, the global tax. If you use your card in a country different from where it was issued, MasterCard charges an extra fee based on the transaction volume, benefiting significantly from international travel and global e-commerce. So MasterCard is essentially making money every time somebody spends money using one of their cards, which is an incredibly powerful business model. Their payment network revenue growth is 13% year over year as of quarter 2 2025. But what if I told you this wasn't even the fastest growing part of MasterCard's business model? The fastest growing part of MasterCard is the services division. This is a high growth part of the business where MasterCard sells specialized solutions on top of its core payment network. They are transforming their transaction data into valuable products for banks and large merchants. And as you can imagine, this reinvestment of the fees business brings insanely high return on invested capital, which is something that I look for in all my investments. We'll talk a little bit more about that later. But for now, let's talk about cyber intelligence solutions that MasterCard offers. MasterCard uses its vast network data to spot global fraud patterns and sell security tools. For example, fraud detection offers advanced AI tools like decision intelligence to analyze transactions instantly and assign risk scores, stopping fraud before it even happens. They have a cybersecurity platform that provides threat intelligence, digital identity, and authentication services to protect clients and the entire digital ecosystem. Their key values are reducing fraud losses and operational costs for banks and merchants. So it's a win-win. It's a win for the banks and it's a win for the clients because it reduces the amount of fraud. The next service they offer is their data analytics and consulting business. MasterCard monetizes the aggregated spending data it collects from billions of transactions. One of these products is MasterCard Advisors, a consulting arm that uses payments expertise and data to advise banks and retailers on strategy. For example, if a new restaurant wants to open up, it'll tell them where is the best spot to open it, where the people that eat out and spend significant amounts of money on takeout live, so they can figure out the perfect location to open a new restaurant. They also have a consumer insights segment that provides actionable insights on market trends, customer loyalty, and spending habits to help clients optimize their business. These services give extraordinary value to the clients as it helps them grow revenue, optimize rewards programs, and manage risk using their real-world data. The final service I want to talk about with MasterCard is their loyalty and reward solutions. MasterCard provides the infrastructure for banks to make their cards more attractive to high-value customers. For example, they offer program management, where they design, manage, and deliver comprehensive loyalty programs from earning points to cardholder benefits. For example, maybe access to an airport lounge or different kinds of purchase protection. This is extremely valuable to the banks, as MasterCard basically outsources the rewards programs. MasterCard is basically marketing for the banks. And for those banks out there that only offer MasterCards and not Visas, it's an insanely high switching cost if they ever consider leaving MasterCard, because you might also lose a significant amount of the customers that signed up for a certain reward with them. I think these services really summarize what I like the most about MasterCard. They have about a 44 to 50% return on invested capital, which is an extremely high percentage, and I think this is why. They can take their, I don't really want to call it a legacy business, but for the sake of the example, we'll call it a legacy business. They took their payment network legacy business and spinned it off into so many more products and faster growing avenues for this company really to take off. So that is a massive part of my thesis around this company. But before we fully settle in on why I wanted to buy MasterCard, we need to take a look at the competition, Visa. Visa really is the only competition, as Visa and MasterCard really have a duopoly over the payment space right now. So let's take a look at Visa. All right, guys, so here we have a graph that analyzes some key data points between MasterCard and Visa. So as you can see, the blue is MasterCard and the yellow is Visa. As for card-based growth, Visa is currently beating out MasterCard, growing by 1% faster per year for their card-based growth. Now, that's obviously incredibly important because MasterCard uses the card growth and then feeds it back into the other services. But I'm not too worried about that, and we'll touch on that in a minute. For operating margins, both of them are extraordinarily high. I'm not too worried about a 6.7 versus a 59.8. Those are absurd margins that you will basically never see with any other kind of company. As for switch transaction growth, they're both growing at the same rate. Same with payment volume growth. But cross-border volume growth really says a different story, as MasterCard's going at 15% compared to Visa's 12%. This is a thing that MasterCard really does have a focus on, and that's evident through in 2024, MasterCard actually had 56% of their total revenue come from international markets. Now, with a growth rate like that and the amount of revenue that they're generating from international markets, I think that makes up for the card-based growth, and I think MasterCard can outperform Visa in the long term. As for direct revenue growth, MasterCard obviously has the upper hand at 17% growth to Visa's 12% growth. Now, a lot of this has to do with the value-added services because Visa simply just doesn't have the same offerings that MasterCard does. They don't have the data analytics and consulting arm, they don't have the loyalty and reward solutions that MasterCard does, and they're not as advanced in cyber and intelligence solutions as MasterCard is. So that has to be the thesis for MasterCard versus Visa. MasterCard is doing a lot more than just the payment processing. Now, I have to say, I think Visa is also still a terrific investment. If I were to sell MasterCard and just own Visa, I would still be happy with that. I think just having exposure to this space is extremely important due to the strong companies and the fact it is a duopoly. I just think that MasterCard is slightly better than Visa in the end, but Visa is still an amazing company. Now, if you have any other thoughts or you want to argue this, please feel free to leave a comment. I'd love to have that kind of discussion. My bull case for MasterCard comes down to two ideas. Number one is the core payments engine that's a toll booth on global commerce. And number two, the high growth accelerator of value added services. Let's start with the core payment engine. MasterCard's payment network acts as a global asset-light toll booth on commerce, providing a stable and resilient foundation for revenue. Growth in cards and volume driven by secular tailwinds, the global shift from cash to digital, and the expansion of the middle class in emerging markets. This directly increases the number of MasterCard branded cards and the gross dollar volume transacted. As a direct byproduct, this generates fees, a revenue stream that is tied directly to volume, not credit risk. So these fees, we talked about them earlier. They're transaction processing fees, switch transaction, domestic assessments, and high margin cross-border volume fees from international travels and e-commerce. This results in superb operating margins exceeding 58%, and there is a very low capital requirement for this to happen. The second part of my bull case has the high growth accelerator of value-added services. Value-added services accounts for nearly 40% of net revenues and representing the primary source of long-term upside and growth acceleration. Every transaction on MasterCard's network generates immense amounts of proprietary, anonymized, and aggregated data. More cards and transactions equals more data, making MasterCard's insights more robust, timely, and valuable. This data is the raw material for value-added services. And once again, these services include cyber and intelligence solutions, data and service solutions, and processing and loyalty. For my bear case for MasterCard, and if any of this starts to come true, I will be selling the stock. The first is there's a regulatory axe hanging over fees. Governments and merchants globally are actively trying to reduce the high margin interchange fees that the MasterCard and Visa both have. As you can imagine, something with that much margin, there's really not a lot of competition, as they have insane pricing power. And there is a risk that laws like, for example, the proposed Credit Card Competition Act in the U.S. could mandate that large banks enable multiple processing networks beyond MasterCard and Visa. This would force price competition in the duopolistic network, and this would directly erode MasterCard's profitability. Those margins would shrink very quickly, and it would be a very bad day to own the stock. But luckily, I don't think that's really a real risk at this time, but if I see that start to form, it will be a reason why I sell this stock. Next, there's the bypass. There's a threat of new technology. Globally, services like FedNow and other account-to-account or real-time payment platforms allow funds to move instantly and cheaply from one bank to another, completely bypassing the MasterCard's fee-generating network. Now, this is an absolute threat to MasterCard, as if a new competitor comes up and once again erodes the margins, MasterCard will be basically useless, and this will be another reason why I'm selling. I want to give the bear cases to tell you guys this is not guaranteed, and I could potentially lose every dollar that I put into this company. But personally, I don't see that happening. I see this as a very powerful company, a very strong business. They have an excellent moat. But once again, this is not financial advice. I'm an idiot on the internet talking about my public portfolio. This is all 100% entertainment. If this should be the start of your research. Go look at the investor presentation like myself, and you can learn a whole lot more about this company. But this is why I really like it. The last thing I do want to talk about here is the valuation, because I do believe the MasterCard is trading at around its fair value right now. I don't think it's on some insane discount where it's like, back up the U-Haul of bills because we're buying it like all day, all night. I don't think it's there yet. But I do think this is an okay spot to start a position, and that's what I did. But if it drops another 10, 15%, then I'm going to really love the prospects, and I'm probably going to end up buying more shares or more parts of shares in this public portfolio. So if you guys enjoyed this video or the research, I put into it, leave a like, comment, subscribe. That would be epic. I got 1 subscriber, and that was super cool to see. So hey, why not you? Why not me? You can watch some more videos in the future. And if you have any ideas for how I can improve the content, please also leave that down below. I need some more on-screen graphics because honestly, I don't really know what to put there, but I'm trying my best, all right? So until next time, I'll see you guys later. Peace.